Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Shawn Cruz. He's a manager of trading strategies over at TD Ameritrade with a midday update as the major averages are solidly in the green, led by bank earnings, healthcare, and the communication sector. Shawn, it's great to have you with me as always. Let's get a quick review here before we take a look at the VIX and some low hedging costs here. But bank earnings, as you and I were talking about before, surprised by the move as much as it has been to the upside.
It was, and I thought it'd be a little bit more of a mixed bag. And if you looked at what the numbers were a little bit mixed from bank to bank. So I'm surprised to see all of the banks rally. And I think that has more to do with just the overall market sentiment today than it does really investors voting on any one bank. I was expecting JP Morgan to have a pretty good day. I wasn't expecting Citi or Goldman to be up as much as they are, but they're also having a pretty solid day today as well.
Yeah, I mean, JP Morgan's quarter was an absolute standout relative to any one of those banks. I mean, Goldman isn't even really competitive in that category.
It looked like the banks that really have a focus on the consumer-related offerings. Those are the banks that have been doing really well. Goldman actually was able to come out and deliver better than expected results in some of its trading units. Citi, however, was not, and a lot of their trading units across the board, things were either flat to lower, especially if you look at their equity trading. Goldman also had to report a loss because of their investments in WeWork, Uber, and a few other recent IPOs, but they said they're still up overall from where they got in on those at. But you're starting to see the different business models for the bank play out differently. JP Morgan pointed to a very strong consumer being able to carry them through that quarter, and that's really, to me, a little bit more of like a microcosm for the U.S. economy overall, where you're seeing the consumer really carry a lot of the weight, but business demand starting to slow down, and the question is how much longer can the consumer keep pulling things along? Looking at JP Morgan, they still can.
I think it is with the consumer too. They are typically a lagging indicator, so you don't realize that consumers don't show that there's economic headwinds out there until a quarter or two after. So it's almost like with the recession, you don't realize you're in it until you get a couple quarters of negative readings there. I wonder if investors, however, are taking a sigh of relief because they are performing as well as they are in a very low interest rate environment, which of course impacts their net interest margin. So I wonder if just a good number is enough for investors.
I think, yeah, and I think one thing, banks have really started to see that writing on the wall, and I don't think that the whole flattening of the yield curve and the pressure on net interest margin caught them off guard. And if you actually take a look and you go back over, we'll even say the past 4 years, they would have to model out and report to the Federal Reserve during their stress test what their exposure was based off of different moves lower in interest rates. And if you notice where those start off years back, they've been able to whittle those down year after year after year. So they've kind of figured out ways to play around with their books and not have as much exposure to net interest margin. And that's starting to show up here in some of these earnings.
That's a great point that you make. Let's take a look at our first chart of the day, the VIX, taking advantage of low hedging costs. And this is the quarter I feel like everyone's coming into where expectations are super low because they are concerned about guidance going forward due to unclear global trade strategies. So it looks like cheap protection might be something to look into.
I think so. Right now, if you look at where the VIX is at, and I think what the big driver of VIX, we could almost tell you exactly how these U.S.-China trade talks were going based off of what the VIX was doing. When things are great, you see it start pushing lower. When we start to get a little bit more uncertainty or a little maybe not that optimism starts to fade, you see it spike higher. So going into the weekend, we actually had some pretty optimistic headlines hitting the tape for those trade talks, and I think that's what allowed the VIX to back off. Yesterday we got a little bit of a hint that maybe things weren't as rosy as we initially thought. Maybe they didn't really get that phase one actually down and in writing like I think a lot of people thought was the case going into the weekend. So I'm surprised to see VIX remaining this low when we have a very unclear picture. I think some of that does have to do with the solid start to earnings that we've received. But if you're going to look at this, and there's a lot of earnings season left to go, we've got a lot of different sectors to hear from. I'm very, very interested in seeing what the consumer-related companies are going to be doing. I think there's still a lot out there that can shake things up here. But when you see the VIX this low and you've got a pretty big month of earnings coming out ahead of you, one thing you can actually use this as an opportunity to go out and hedge. This is really an indicator that hedging costs are going to be relatively low. So if you have, say, a well-diversified portfolio, you can go and look at using Nasdaq options on the Nasdaq 100, because that's certainly where we see a lot of volatility play out. There's a lot of those growth-type names in there. You can use this as an opportunity to go out there and hedge your portfolios going into earnings season.
Yeah, I would agree with you, and that's a great point that you make, that one day is not an earnings season make, right? Yes. And perhaps it could be that investors and traders just have macro anxiety exhaustion, right? So to get one decent day of earnings, and if it were to continue for the entire season, that could be the next leg up in the market. But I do happen to agree with you that until we kind of cycle through what happens in consumer and technology because of that exposure to the U.S.-China trade war rhetoric, I happen to agree with you there. Shawn, thank you so much for joining us at MarketSite.
Thanks.
And thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.